Welcome back. I'm Pratap here. Today is the 25th February 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Even before that, please understand we are providing complete free training on supply demand zone price action. Most of you might be knowing the cost of the training is over 8,000 US dollars, but we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. You should start our training from first lesson that is available at the bottom of the page. Scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to the training instructions I mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the Telegram channel top of the window, you can find pinned messages. Click on the pinned messages. There I kept all the training instructions. Learn this course according to those training instructions. Definitely you will become a very good independent trader in the coming months. So please make use of this opportunity. Okay, now let's get into our HLQ zone performance evaluation. Yesterday, end of the day report, we identified 12 high liquidity zones from daily and 75 minutes time frame. And we got trades from two stocks. The first one is Indian Hotels. Indian Hotels is a 75 minutes high liquidity zone identified by our NeoStock software. How it identified? As a drop, 1, 2, 3, 4 base candles and a rally candle. Okay, this 75 minute zone we should fine tune with 15 minutes time frame. So go to the 15 minutes time frame. In the 15 minutes time frame, here you have a legging candle, you have 1, 2, 3 base candles, and then you have a rally candle, rally, base, rally. And within this 15 minute zone, we have a fine-tuned 5 minute zone, a perfect zone, fine-tuned 5 minute zone. See here we have a rally, 1, 2, 3, 4, 5 base candles and a rally candle and follow-through candles. And previously price came very close to the zone and again sharply moved. All these are all indications that this is the area we have very strong institutional order flow. And today prices entered into this zone. When we got the trade today morning at 9:20 candle, even 9:25 candle also, the 5 minutes candles. The prices were in this zone. They gave you sufficient time to give you a trade. Go to 1 minute time frame, you get better clarity. You have 1, 2, 3, 4 candles. So that too 9:26 candle was there entirely inside this zone. So you should not say I missed this trade. No excuses at all. Sometimes you say, prices came quickly before I placed the order, I narrowly missed. No such kind of excuses. Everybody you would have got a trade in this zone. You would have taken this profit today. Okay, go to the 5 minutes time, 15 minutes time frame. Here we have a target. Drop, base, drop. Earlier, initially, your target would have been somewhere here. Once this 15 minutes candle is completed, you got the trade, and then 15 minutes candle is closed. That means You have to revise your new 15 minutes targets to top base drop, and after that prices came into this zone. And when you got the trade in this zone at morning 9:20 5 minutes candle. When it reached the target, morning at 9:50 5 minutes candle. That means in just half an hour you completed the trade and it reached the target. And this is the way Indian hotels gave you a profit, 12,900 rupees profit, which is 8.5% ROI. Excellent trade. After that, what happened? Market in the dynamic market. Dynamic market, a new 15-minute zone is created here. Observe here. You have a drop, 2 base candles and a rally candle. Drop, base, rally. A new 15 minutes. You may get dynamic zone opportunities. You already learned in lesson 21. So during live market, any fine-tuned zones are created. We call them as a dynamic zones, indicating that in the live market these zones are created. And we identified and we planned the trades. That is how we should understand. Okay, when you get the trade in the retracement, you get opportunity. Go to 5 minutes time frame. Is it having a fine-tuned 5-minute zone? Yes. You have a rally, base, rally. An excellent 5-minute zone. You go to 3 minutes also, you get clarity. See, you have a rally, base, medium size candle is also part of the base, then rally candle. And this is the zone holding the prices continuously. But can we plan a trade? Do we have RR here? Yes, you have 1:3 RR is there from here to here. But you can't take this trade. The reason is a new 15 minutes target is created again. A new 15 minute zone is created. See here, drop, base, drop. If you draw a zone, you don't have any RR. See, lot of time price stayed between these zones. Finally it is violated and reached. And even this is also violated and further moved up. And once again, end of the market, prices once again came. They went more deep and sharply prices moved. That is a different story, last 15 minutes. But in between, see how many candles. Why the price moved in a narrow range? Because here you have a fine-tuned 5-minute zone. Here you have a 15 minutes target zone. Both strongly, maybe institutional order flows are strong in both these areas. Slowly consumed all the supply in this 15-minute zone. Finally, this 15-minute zone is violated. And moreover, this 15-minute zone is already tested earlier. It might have consumed some supply. This time it consumed the entire supply and finally this 15-minute zone is violated. But when you are planning your trade, what is your target? This drop base drop is your target. This is your entry. In between, do we have any RR? You don't have any RR. That's why you cannot take a trade from this zone. By seeing this, if you would have taken a trade, we would have got a very good profit. It reached 1:3 RR. We would have got again another super profit we would have got. This is how you might feel. But in reality, you can't take this trade because RR is not there between fine-tuned 5-minute zone and the 15-minute supply zone. Maybe after this violation, if prices would have reached, you would have taken a trade. But that happened during the last closing hour of the market. Last 5 minutes candle. Go to 1 minute. See the last 15:28 it reached inside the zone and again it pushed the prices up. It happened last 2 minutes. So you can't take a trade, right? Anyway, see this is how it is. This zone holded the prices initially. At the same time, this 15-minute zone also pushed the prices down. So that's why only one trade is valid. That is the one we got at morning 9:15 and reached the target at morning 9:40. So this is Indian hotels. Apart from this, we also got one more stock. Today got trade, excellent trade. One trade is a very sad trade. Just 65 paisa. It's a 3,000 rupees stock. 3,000 rupees stock, 60 paisa means negligible. But 65 paisa difference, our stop loss is hit. After that it moved 65 paisa below, and then sharply everything happened in just fraction of seconds. Or within 1 or 2 seconds period, nothing more than that. And after that it gave a great move. But our statistics point of view, we have to consider that is a stop out trade only. Just because 65 paisa difference is there, you can neglect that and we cannot show that as a successful trade. So go to DMAT. It is also a 75 minutes high liquidity demand zone. How our software identified this? As a drop, 2 base candles and a rally. This is how our software identified DMAT. Drop, 2 base candles and rally. And this 75 minute zone we fine tuned with 15 minutes time frame. We have 2 15 minutes LOTL order flows, I guess. See here you have a rally candle, medium size legging, 2 medium size base candles and a rally candle and follow through candles, excellent follow through. After that again prices came almost near to this 15 minutes. That's why I'm saying gap is small. Both are LOTL scenarios. 5 minutes LOTL we can't consider as 2 separate trades. We have to combine. But 15 minutes there is a big gap. You have fine-tuned zones with enough distance they might be there. If this is stopped out, next trade you will plan in the another fine-tuned 5 minutes. So that's why even though LOTL zones are 15 minute zones, still you can draw on the charts. See, draw. Need not look for the origin. Look for the origin in the fine-tuned 5 minute zones, not in the 15 minutes or 75 minutes. Drop, base, rally. This is the first 15 minutes, the recent one. And the first one that is created, this rally, base, rally. Rally. This also I consider as rally, rally, base, rally. Okay, both these 15 minute zones, again fine tuned with 5 minutes time frame. See the 5 minute zones? We have an excellent 5 minute zones here. See, failed ERC as a rally legging. You have 1, 2, 3 base candles and a rally candle and follow through candles. What about here? You have a rally candle, 2 base candles and a rally. See, actually this candle, this is a, shall we consider as a base candle or shall we consider as a legging candle? This is the doubt you get. That's why what I did, I went to 3 minutes, because sometimes 5 minutes clarity is missing, you can go to 3 minutes. See, if you consider what will happen, risk will increase. If you don't consider that 5 minutes candle as a, if you consider that as a leg candle, what will happen? Sometimes your trades might be missing. You have both the problems are there. That's why go to the 3 minutes. 3 minutes I got perfect clarity here. See here you have a drop candle, you have 1, 2, 3 base candles and a rally candle. So this is the way. Now risk management is also proper and sometimes your trades also will be executed. See, go to this 5 minute zone. Now you observe how it looks like. See, earlier you would have drawn a zone like this. Rally, 2 base candles, rally. Or you would have drawn a zone like this. Drop, base, rally. Now because of the 3 minutes, now your zone is like this. See, anyway, it doesn't really make, even if you draw up to this drop, base, drop, still you keep some entry buffer, that way your zone will be executed. Because sometimes you know what happening, some people are not properly calculating the entry buffers. Trying to optimize so much to reduce the risk, that way they are missing the trades. See, you have to accept minimum risk, that is very, very important. Otherwise, you will be missing good trades. See what happened today. See that 3 minutes level prices entered almost maybe small entry buffer, maybe 5 paisa, 10 paisa entry buffer you would have added, that is okay. And finally reached this 15 minutes target. Here you have a 15 minutes target. Rally base drop, the one revised one, and reached to this newly created 15 minutes target. See, initially prices came here, see how sharply it moved. Some more sharply, if it might have moved and closed somewhere here, you would not have considered this candle as a leg out. But you have sufficient body, closed outside the zone. Even though wick is bigger, still body is also bigger. That way you consider this as a leg out. Okay, this is a successful trade, fine. Then what about the first one, the first fine-tuned 5-minute zone? See here. After adding your stop buffer, this is the picture. Prices came and then sharply it moved and up to here, you know how much? 4.5%. RR, it gave you the return. But, see here, a small wick below your stop buffer. Let me draw a horizontal line to make it very clear. See, this is our stop buffer. 90, yeah. $326.65. Okay. See, the blue color line is your actual stop buffer value. But below this, slightly it pierced and then sharply it moved, gave within a short period. I can say in how many minutes it gave you? This is a morning, this one. Morning 9:15, actually it is 9:17 candle. And then gave you 1:4.5 RR in 9:35 candle. That means in less than 20 minutes, it gave you huge profit. Go to 1 minute. See, this is morning 9. This is morning 9:15 candle. See, this is the 9:15 candle. And price did not enter into this zone. That means next candle prices came. It's a perfect trade. Now, did you notice? With a gap down, it opened just below our stop buffer, then sharply it came up. Opened with a gap down and sharply it came down. So that means everything happened in just fraction of a second. Because it came below, you might have kept your stop loss. Your stop loss might have been hit and immediately it started moving. That's why I'm saying it's a very bad luck trade if you would have taken this trade. And some people could be, lucky people also might be here. You might have taken a trade, you might be typing your stop buffer and before placing, with a gap down came and sharply moving. And before you submit your stop buffer, you would have got a good profit. So all the quick, everything happens in a quick. If those who are having a luck in your favor, today you would have got a huge profit in this particular. But anyway, performance calculations point of view, if it is stopped out, I have to register that it is a stopped out. Technically, some people might have got good profits from this trade. But according to our software calculation, it hit the stop loss. After that, 65 paisa below it went and sharply it moved up. Otherwise, you would have got a good profit, huge profit. But anyway, it hit the stop loss value. What is the loss it has given? 1020 rupees. That is 1% negative ROA. Actually, it is 0.96% negative ROA. 0.96 I rounded to 1%. How badly we missed a good trade here. That is what you should understand. But no problem. Next we got an opportunity in the next fine-tuned zone when prices reached here at 12 o'clock 7. Generally you keep small. I think 10 paisa entry buffer is sufficient to get. What is this zone value? 351855. What is the low of this candle? 351890. 1890. 351855. That means 65. Yeah, another 65 rupees. Sorry, 65 paisa entry buffer. See here, with the 65 paisa difference, here our stop loss is hit. Here with just the 65 paisa entry buffer, your trade would have been executed. This is for those who would have kept the 3 minutes zone. If you would have drawn a 5 minutes zone, your trade would have been executed. Because 5 minutes clarity is missing, we have drawn 3 minutes. Generally, you keep some entry buffers, a maximum up to 0.1%. 0.1% means probably you will keep around 2 rupees or 3 rupees stop entry buffer you would have added somewhere here. Your trade would have been executed. Even keeping a small entry buffer like 65 paisa or 1 rupee would have executed your trade. And after that, see how sharply it moved and reached the target. When you got the trade, this one at 12 o'clock 7 minutes. And when it reached the target at 12 o'clock 50 minutes. So that means in less than 45 minutes, your trade is completed. So how much profit DMAT has given? The second trade, 4,200 rupees profit, which is 4% ROA. So these are the two stocks we got the trades today. Apart from that, there is one more important thing. This is about NIFTY and Bank Nifty supply demand zone chain. Let me focus on the NIFTY supply demand zone chain. See, our NIFTY supply demand zone, 5-minute high liquidity zones, how well they are giving profits in the recent time. You people, especially NIFTY, Bank Nifty supply demand zone traders, might have experienced it. Same is the case today. Today also, from the demand zone it has given the trade, from the supply zone also it has given. Which demand zone? 5 minutes high liquidity demand zone. Which supply zone? 5 minutes high liquidity supply zone. Most of the times we see during the intraday, the movement is between the high liquidity demand and supply zones. If the demand zone is violated, the next demand zone. If the supply zone is violated, next supply zone it gets the trade. But today none of the high liquidity demand and supply zones are violated today. From our report. What is the report yesterday? NIFTY Bank Nifty report you have seen. This is the one. See, this is the high liquidity supply zone 63. Serial number 63. And where is the high liquidity demand zone? Serial number 66. Today we got trades from both these zones. From each zone 80 to 90 points it captured. Let me open that NIFTY 5 minutes chart. See here, this is the NIFTY 5 minute zone. Okay, the thick green color is fine tuned with 1 minute time frame. Why I fine tuned with 1 minute, I will explain. But first, this 5 minute zone, this is the 5 minute zone, 5 minutes high liquidity zone. See here, we have a NIFTY 5 minutes high liquidity zone. When this zone is created, see here, this is the leg-in. Fifth zone, 1420 is the leg-in. 2 base candles. And then fifth zone, 1435 is the leg out. See the report? Serial number 66. Look into the timestamp. Fifth zone, 420 is the leg-in. 2 base candles. Fifth zone, 2024. 1435 is the leg out. See, this is the 1435 candle. Fifth zone. This is the 5 minutes high liquidity demand zone. This is the nearest 5 minutes high liquidity demand zone for yesterday's closing price. Yesterday end of the day closing price, this is the nearest. And what about supply zone? This is the nearest high liquidity supply zone. Of course, before there are a pierced supply zone is there, normal supply zone is there, but we don't really much care about them. Our main focus is on the high liquidity zone because they have higher success rate compared to the other zones. I am not saying normal zones does not work, they work. But compared to them, high liquidity zones are having extra success rate. They will also fail. I am not saying they won't fail, they will also fail. Without testing also high liquidity zones will fail. But that failure rate is less compared to the other zones. Success rate is more. When it is the day when it is failed, your trade will be stopped out. You have to accept that. But the advantage is when your trade is stopped out, your loss is minimal. But the day when you get the profit, your profit is more, 3 times more, maybe sometimes 5 times more. That is 1:5 RR or 1:3 RR. And today price moved between this high liquidity supply zone and high liquidity demand zone. And high liquidity demand zone is the immediate demand zone for yesterday's closing price. Before that there are no zones. But high liquidity supply zone is not the immediate supply zone. Before that we have a piercer supply zone and a normal supply zone, and this is the high liquidity supply zone. And both are violated and prices reached up to here. See what happened today. And let me see this high liquidity supply zone also. How our software identified. Our software high liquidity supply zone identified on 24th February 2025 this year. 24th February is yesterday only. Yesterday only this high liquidity zone was identified at 9:20 candle after the 2 base candles. So yesterday morning 9:25 minutes candle, you see, this is the morning 9:25 minutes candle. Our software identified this as a drop candle. These two are the base candles and this is the drop candle. This is morning 9:35 candle. See, morning 9:35 is the leg out. And this is the high liquidity zone, our resistance supply zone. See, today what happened? Prices entered into this zone. But before entering into this zone, today see what happened? Today prices reached this zone. Even 9:15 also, ignore 9:15 1 minute candle, but this is the candle it reached. First of all, why I have drawn this zone? Because 5 minute zone risk is bigger. And moreover, from this 5 minute zone risk, I am not getting 1:3 RR till this 5 minute supply zone. So the moment I go to the 1 minute, why I thought of going to 1 minute? See, many candles are moving in this area yesterday. Okay, this is today. But yesterday in this area, I thought maybe some high liquidity zone 1 minute time frame might be available. So with that intention, I went there. Then all of a sudden, you see, interesting thing. If it is a normal 1 minute zone, I would have ignored it. 1 or 2 times it is tested, I would have ignored it. Generally it happens. But you see here, drop, base, rally, LOTL, 1 minute zone is created. Maybe already tested once, moved up. Again came, while coming down, again drop, base, rally. That means institutions might have added a new order flow again here. So that is the reason why this is the area I got the interest. The LOTL is again added into this. So that's why this is the area we can fine tune. That way you get a huge RR. You see, until this 5 minutes high liquidity zone, see the RR. If you want to plan a trade here, approximately I am adding some stop buffer here. And this is our entry. Maybe this should be your target. You got 1:6.79 RR you are achieving with this. So we kept some trust on this because this is a high liquidity area. But today what happened? Prices entered into this zone. Yes. This is morning 9:15 1 minute candle. You can't take the trade. Ignore it. This you can't. But once again you got an opportunity at morning 9 o'clock 26 minutes. You should not miss this trade. First one, there is an excuse. We have this is morning 9:15 1 minute candle. Today morning 9:15 1 minute. But this is today morning 9:26 candle. It gave you an opportunity. So definitely you should not miss this trade. If you would have taken this trade from here to this high liquidity supply zone, it has given 90 points move it has given. And again this is high liquidity supply zone. If you would have got for a short trade, see again till this 5 minute zone, it has given another 80 points move it has given. Maybe some entry buffer if you had exited. Otherwise, maybe either you might have exited using some trailing stop, or you have to wait till the end of the day again. Prices reached here. Okay, performance point of view it reached, but for your trading point of view, mostly you will exit a little before. That way, that's why the pressure has come. So many people book the profit before the zone. So before entering itself, again it started moving up. If anybody did not book the profit at 11 o'clock 34, you would have waited another 2 hours. Not 2 hours, 4 hours. This is 11 o'clock 30. 2:20. So almost 4 hours you would have waited. But that is not practical, right? So prices are not moving there or not moving down. Somewhere you get some frustration and you book the profit somewhere in the middle. Or anybody using 1 minute trailing stop loss, when one of these zones are violated, instead of booking your profit, you might have booked your profit somewhere here. Here you have 1 minute zone is there. See? Maybe here you would have booked. So this much profit you might have missed extra profit. I'm talking if anybody did not keep some buffer before booking the profit. See, we are saying up to here 90 points captured, but generally you book your profit here. Same is the case. Here this is the place you have to book the profit, but practically you book your profit here. See, there also you kept some buffer, here also you kept some buffer, maybe even a little below also. So that's why I'm saying this is a successful trade and this is again a successful trade. But who is the reason behind these trades? The reason is our NeoStock software's NIFTY supply demand zone chain. In that NIFTY supply demand zone chain, the 5 minutes high liquidity supply zone and 5 minutes high liquidity demand zones. The beauty of these high liquidity zones, how they are working, that's always amazing. That's why Nifty Bank Nifty traders, when they are using our supply demand zone chain reports, that way they are getting maximum profits. I'm not saying they won't get losses. There are days high liquidity zones also will be violated. That is a bad day. But they won't get everyday bad days. Rarely happen when volatility in the market is very, very high. Some bad news happened. Such kind of situations, maybe the immediate high liquidity zones might be violated. Next level high liquidity zones may give you the support or resistance. So that means if one high liquidity zone is violated, it doesn't mean you won't get trade. You get trade in the next high liquidity zone again. See, for example, if this high liquidity zone is violated, 67, again you may get an opportunity at 70. There you have another high liquidity, but this is already pierced. Suppose let us assume it is not pierced. You get support here. Okay, this is pierced. Maybe you may get support here. Or maybe you may get sometimes low priority high liquidity zone also may work sometimes. Sometimes it will fail, sometimes it will work. Some people take a risk, a little extra risk, and they play with low priority, high liquidity zones also. So this is how the strategies we are building. I explained these strategies a long back. If you are not aware of where the old videos you have to refer, go to NeoStock homepage, go to the playlist. Here you have a Nifty, Bank Nifty, supply demand zone chain. Click on this view full playlist. Now you got all the, okay, here many reports are here. Almost 1 year back. See here Nifty, Bank Nifty analysis videos. Some of these videos are short videos. Short videos, that is only a quick analysis. All these are all quick analysis, even in the heading also. You have 1 hour videos will be there. Go to that one, focus on those 1 hour videos. They are the detailed analysis videos. Yeah, here you see you have 1 hour video. Nifty supply demand zone chain. See, detailed analysis. This is on 17th April 2024, almost 1 year back. 1 year back, I was having some time at that time. Maybe some weekends I used to analyze. And people who attended this, they are very well aware how to use Nifty, Bank Nifty, supply demand zone chain videos. How to analyze them. Or you can take trade blunt in a blunt manner. What is the blunt manner? Directly go to 5 minutes Nifty, Bank Nifty, high liquidity zones, draw them on your charts. When prices are reaching there, then you plan your trades. That way you can do. But if you are using Nifty, Bank Nifty, supply demand zone chain analysis, whatever the analysis I did, if you attend these videos, learn those concepts and you plan your trades accordingly. Sometimes fine-tuned zones also you will plan your trades. You have a 15 minutes high liquidity zone. Inside you have a fine-tuned 5 minute zone. And those fine-tuned 5 minute zone, that 5 minute zone need not be a high liquidity zone. But it can be a fine-tuned zone inside a 15 minutes high liquidity zone. That way also those trades work very well. Because if you are directly looking into the 5 minutes high liquidity demand and supply zone, sometimes you will be missing the fine-tuned 5 minutes inside 15 minutes high liquidity zone or inside 75 minutes high liquidity zone. You will be missing those trades. That's why I don't want you to miss those trades. Now immediately you have 5 minutes high liquidity demand zone, supply zones are there. You got the opportunity for the last 3-4 days or maybe last 1 week, continuously you are getting trades. Sometimes your 5 minutes high liquidity zones will be far away. Maybe you might be having a near 15 minutes high liquidity zone. Inside you might be having a fine-tuned 5 minute zone. That will be working very well. So that's why if you attend this video, the 17th April 2024 video, you will get clarity. If you want to listen more videos, see there is again 11th April also you have a detailed analysis Bank Nifty. And then again 11th April even Nifty detailed analysis is also there. Again 1st April Bank Nifty, this is quick analysis. Yeah, here you have 30 March detailed analysis Bank Nifty. 27th March quick analysis. These are all the quick analysis. Quick analysis means these are the short analysis continuation to previous detailed analysis video. See, this is the weekend analysis. This is a detailed analysis. From this video, these quick analysis videos are continuation. So many videos we discussed about Nifty and Bank Nifty in the past 1 year back. So Nifty, Bank Nifty traders, focus on them. Make use of these videos. See, ultimately what is the goal? Whether you are buying in Nifty, Bank Nifty, or you are buying in daily HLQ, daily 75 minutes or daily HLQ zone video, analysis videos. I mean analysis zones. Or maybe you are using bullish, bearish trade setups for different income trades. Or you are using pierced zone strategies. It doesn't matter. You can use anything. What is ultimate goal? Ultimate goal is making money. And that is also not ultimate goal. Making money with less failures and more success. That is excellent, right? With less failures and more success is a great achievement, right? So that's why the reason behind developing this NeoStock software and all these high liquidity zones is that is only the goal. What is the best way to get more profits and less losses? I'm not saying we get less zero losses. We get always. Stock market is uncertain. Anytime we get losses. But to prevent the losses, we build a very strict risk management system by keeping the entry, stop loss and targets in our analysis itself. So risk management, our supply demand zone is taking care. The core concepts are taking care. The only thing that is not a supply demand zone is not talking is which one gets higher success, which one gets less success. That does not talk about our supply demand zone theory. That is what I worked in the background, developed algorithms, identified some concepts, given a name high liquidity zones, developed some strategies. That way we are making sure that these high liquidity zones will work. Compare it to the other zones. They are also having failures. They will also be stopped out one bad day. That we will accept those losses. So compare it to the losses, our profit should be more. Then only we get better profits, right? So that is what happening in NIFTY. See, this is the third video or fourth video during the last 1 week or 10 days. I discussed about NIFTY. Why? Because I know I have some subscribers, they took the package only for NIFTY, Bank NIFTY. They don't trade. One subscriber trades only NIFTY only. We have few subscribers. Took NIFTY, Bank NIFTY. In that one subscriber, he trade only NIFTY. You don't focus on the other things. That's it. How he is trading? By using this supply demand zone chain. Maybe he already experienced person. Also he is aware of our NIFTY supply demand zone. Probably he is following us for the last 1 year. He got a good grip, focusing only on that. So that's why we have different types of customers who are using our NeoStock software. Some are using only NIFTY, Bank NIFTY supply demand zone chain. Some are using only NIFTY. Maybe some might be using only Bank NIFTY. I don't know. Maybe might be using only Bank NIFTY. Some are using only high liquidity zones. Some are mastered in all these concepts. They are using wherever opportunities, they are not leaving. They are getting all. Bullish and bearish trade setups they are focusing. They are focusing on NIFTY, Bank NIFTY. They are focusing on HLQ zones. We have two customers, they focus on everything. Because they mastered in all these concepts. So this is the way you have to understand, you have to where exactly you need to focus and how best you can make use of these concepts. Our NIFTY, Bank NIFTY trade, especially the NIFTY traders who took trades from NIFTY, last 1 week you would have got a very good profits. I'm sure probably you might have already got the money that you have to pay for next 1 year subscription. More than that money you already earned during the last 1 week or 10 days time period. I'm just joking. The potential, I'm trying to explain the potential these reports are exhibiting. That is what you have to understand. Okay, this is about the NIFTY and remaining trades we did not get any trades. Let me quickly go through. BHL is a daily high liquidity zone and it is a very old zone. We don't have data to fine tune the zone, but recently 75-minute zone is created. See here, drop, base, rally, but unfortunately no proper 15-minute zone here. See, there is no proper 15-minute zone. Maybe the lower time frame horizon might be there, but 1 year back we don't have the data available. So I'll leave this. So I left this. Next one is Coal India. This is a daily high liquidity zone. Coal India already we discussed previously. We have fine-tuned this zone, Coal India. Let me go. Please look into the old videos. because I don't want to waste our time by again explaining how to fine tune. Previous HLQ analysis videos, please refer. We have a fine tuned 5-minute zone here. Earlier prices came very near to this zone. Rally base rally came very near. Maybe just touched, but okay, that is okay. See the rejection. That's why we can consider another trade. But now also, today also prices came not very near. They came and then again strongly pushed. Maybe strong order flow might be here. Today we missed the trade, and next one is NCC. This is also daily high liquidity zone. This one also we discussed. NCC also we did not fine tune the zone because earlier it is a January month 2024. We don't have 5 minutes data. So I left this stock. Previously also we discussed. AU Bank, Canara Bank, Hindustan Motors, all the 3 stocks we already fine tuned. Previously we discussed. When I opened the chart, this analysis already there. So please refer previous analysis videos. AU Bank, even Canara Bank also. This is today's candle. Price did not reach. How we fine tuned, I already explained, maybe yesterday or day before yesterday's videos. Please refer. And Hero Motors, this is also we discussed, drop base drop. Today also price did not reach into this zone. So these, please refer the previous videos. Probably on 21st February video I might have explained HLQ analysis video. And next one is Manapuram. Manapuram, yesterday we discussed. Yesterday only we have drawn this zone. The 5 minutes high liquidity zone here. Our software also suggested this is a 5 minutes high liquidity zone. It is an aggressive trade setup inside the daily zone. Today prices entered into the zone, but they did not reach this 5 minutes high liquidity. Otherwise we would have gone for a short trade here. We missed the trade. And the sale actually we got 2 times in our report. One is 75 minutes demand zone and another one is daily supply zone. This is the 75, this is the supply zone, daily supply zone. We have a drop, 1, 2, 3, 4 base candles and a drop. This one I think we analyzed earlier, but anyway, let us see the recent price action, how we fine tuned. Go to 75, we have drop base drop. This one fine tuned with 15 minutes time frame. We have a drop base drop, 15 minutes zone. And also you have rally base drop also there, but it is LOTL zone inside. Now go to the 5 minutes. Here we have 2 order flows. One order flow is this drop base drop, fine tuned 5 minute zone. And another order flow is drop base drop. This is the origin for this entire 75 minute zone. Okay, anyway, prices did not enter. At the same time, our software also identified a 75 minutes demand zone also. High liquidity demand zone. Rally, 1, 2, 3, 4 base candles and rally. This one, when I want to fine tune 15 minutes, structure is not good. 15 minute structure is not good. We don't have a proper 15 minute structure. But the moment I went to 5 minutes, we have origin. 5 minutes origin. See here, we have a rally, you have a base, you have a rally. This is a rally, base, rally. This 5 minute zone is the origin for this entire 75 minute zone, high liquidity zone. See, first time it picked up the order. Again, second time it picked up the order, entire leg out formation has been started. Here base candles formation by picking the order. Next leg out formation by picking the order. While this leg out formation has been created, institutions might have added even a more strong order flow in this area. So we want to plan a trade in this area, but today prices before reaching, last minute it reached and then again sharply moved before reaching this origin. And DMart we discussed, and Indian hotels we discussed, and Infosys is one thing. This is a 75 minutes high liquidity demand zone. When this zone is created, 5th November 2024. This is the drop candle as a leg out. You have 1, 2, 3, 4 base candles and a rally candle with hidden body. This is the 75-minute zone. This 75-minute zone I fine-tuned with 15 minutes time frame. Look into the 15-minute zone here. So here you have a drop base rally. This is the 15-minute zone. What is that I have drawn? Maybe a 5 minutes high liquidity zone I have drawn here. This is an aggressive trade setup. Okay, this is a drop base rally. Now go to the 5 minutes time frame. In the 5 minutes, we have a rally candle as a leg-in. You have 2 base candles and rally candle. So type 2 proximal I have fine-tuned, and this zone is already tested. So can you plan a trade in this zone again next time? No, because it is already a tested zone. If it is a high liquidity, we can, but we don't know it is high liquidity or not, because it is tested only once. So that's why we can't plan a trade. But look into here. You have a drop base rally. This zone is getting tested several times. First time, second time, then there is a move is there. Good move. Again third time, prices went deep. Fourth time, drop base rally is created. That means a new order flow is again added into this zone. This 5 minute zone, once again it is tested. While testing, you see it is a drop base and again with a huge gap, pro gap and a rally candle with hidden body. So many LOTL zones are created within this zone. So those who can plan this aggressive trade setup as a 5 minute zone, Monday, it entered, Monday it gave a trade. And from here it moved up Monday. From this high liquidity zone. Monday means yesterday, right? Yesterday it gave a support. And at the time, if you observe carefully, a 15-minute zone is created here. Go to the 15 minutes time frame. We have a drop, base, rally and follow through candles. Of course, I consider these are all base candles because they are medium size candles. A drop, I consider as a 3 base candles and a rally candle. They looks a little bigger, but still I convinced. Initially I thought I can draw drop base rally, but when I seriously compared all these bigger candles and these candles, I consider these are the medium size. That way drop 3 base candles and a rally. So this 15-minute zone, this 5 minutes high liquidity zone is the origin for this 15-minute zone. That means institutions might have added a strong order flows here again. So definitely we can plan a trade today. But today prices did not enter into this 5 minutes area. Today morning 9:15, that's it. After that price stayed outside the zone only. That way Nifty did not get a trade. And last one is the Tata Chemicals. This is also a 75, but it's a very old zone. I think 2022. 19th July 2022. Almost 2.5 years old. So we can't get 5 minutes data. 15 minutes data is available. I have drawn a zone. Today actually from the 15 minute zone prices entered and moved. But this is the last 15 minutes candle before market closes. That's it. But anyway, we can't fine tune this zone. But here any drop base rally is created. Let's go to the 15 minutes. No, it is a pivot. So that's why the 5 minutes doesn't have any value. If you draw a rally, base rally, it doesn't have any value. It looks like for some time this zone holded, but after that it is violated. So anyway, we don't have any interest on this stock because we don't have a fine-tuned 5 minutes data in this stock, so we can't take any decisions. So this is about high liquidity zones. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.